Michalowicz's Profit First presents a transformative approach to business financial management, challenging traditional accounting principles and offering a practical system to ensure consistent profitability. The central idea is that businesses should prioritize profit first rather than treating it as an afterthought. Many entrepreneurs struggle with cash flow and financial stability because they follow the conventional formula: sales minus expenses equal profit. This formula leads to a common issue. As revenue increases, expenses rise proportionally, often leaving little or no profit. Instead, Michalowicz proposes an alternative formula: sales minus profit equal expenses. By taking profit first, business owners force themselves to operate within their remaining budget, creating a more disciplined and efficient financial structure. This method is grounded in behavioral psychology, particularly Parkinson's law, which states that work expands to fill the time allotted for its completion. Similarly, expenses expand when all available revenue is accessible. By removing profit first, businesses automatically limit unnecessary spending and optimize their operations. A core component of Profit First is a bank-based financial management system that prevents the common problem of mixing all revenue and expenses in a single business account. Instead, Michalowicz advises business owners to set up multiple bank accounts, each designated for specific financial functions. 1. Income account. This is where all revenue is initially deposited before being allocated to other accounts. 2. Profit account. A set percentage of income is immediately transferred here, ensuring that profit is preserved. 3. Owner's pay account. Business owners must pay themselves a fair salary, separate from business expenses. 4. Tax account. This account holds funds for tax payments, preventing financial strain during tax season. 5. Operating expenses account. The remaining funds are used for business expenses, forcing owners to operate within their means. By dividing revenue into these accounts, entrepreneurs create a structured cash flow system that prioritizes profit and prevents financial mismanagement. This system ensures that businesses avoid the common pitfall of spending everything they earn and instead develop financial discipline and clarity. Michalowicz emphasizes the importance of starting small. Many business owners resist the idea of taking profit because they believe they cannot afford it. He advises starting with as little as 1% allocated to the profit account and gradually increasing this percentage over time. This incremental approach prevents financial shocks while reinforcing the habit of prioritizing profit. Another key practice in Profit First is quarterly profit distributions. Unlike traditional reinvestment strategies, Michalowicz insists that a portion of profit should be withdrawn and enjoyed every 3 months. He compares this to public companies paying dividends. Business owners should view themselves as investors who deserve financial rewards. This practice boosts motivation and reinforces the psychological shift of prioritizing profit. However, profit should never be used to cover business expenses, as doing so undermines the entire system. To help entrepreneurs implement Profit First, Michalowicz introduces the Instant Assessment, a tool to evaluate a company's financial health. This assessment involves analyzing real revenue, total income minus pass-through expenses, and categorizing expenses into appropriate allocation percentages. Many business owners discover that they allocate little or nothing to profit or owner's pay, highlighting financial inefficiencies that need correction. A major theme in Profit First is frugality fuels innovation. When businesses are forced to operate within financial constraints, they become more creative and efficient. Michalowicz encourages entrepreneurs to challenge every expense and determine whether it is truly necessary. Many businesses waste money on excessive software, unnecessary services, or ineffective marketing, eroding profitability. By imposing financial discipline, businesses uncover more cost-effective ways to generate revenue and improve profitability. Another critical issue Profit First addresses is debt addiction. Many businesses rely on credit lines or loans to cover operational shortfalls, creating a dangerous financial cycle. The Profit First system discourages debt reliance by ensuring that a portion of revenue is always reserved for profit. Over time, this method helps businesses become financially independent and reduce their dependence on borrowing. Michalowicz also warns business owners about the survival trap. Many entrepreneurs operate in constant crisis mode, making reactive financial decisions rather than planning for long-term sustainability. They focus on immediate cash flow problems rather than addressing underlying financial issues. The Profit First method breaks this cycle by establishing proactive financial habits that ensure businesses thrive instead of just surviving. The book delves into psychological barriers that prevent business owners from prioritizing profit. Many entrepreneurs feel guilty about taking money out of their businesses, believing that reinvesting every dollar is necessary for growth. Michalowicz challenges this mindset, arguing that a profitable business is a healthy business. Business owners who pay themselves properly and take profit consistently are more motivated, financially secure, and committed to long-term success. For business owners struggling with cash flow, Michalowicz provides a step-by-step transition plan to implement profit first without disrupting daily operations. His recommendations include 1. Opening the 5 core bank accounts and allocating revenue accordingly. 2. Starting with small profit allocations and gradually increasing them. 3. Reducing unnecessary expenses to match the new financial structure. 4. Maintaining quarterly profit distributions as a strict rule. 5. Committing to operating within the remaining budget, reinforcing financial discipline. Michalowicz also highlights the importance of accountability. Many entrepreneurs struggle with financial discipline, so he advises working with a financial coach, accountant, or bookkeeper to stay on track. Having an external accountability system greatly increases the likelihood of success in implementing Profit First. Another vital aspect of Profit First is establishing a financial rhythm. Michalowicz recommends bi-weekly allocation days, during which funds are systematically distributed into their designated accounts. This routine ensures that business owners maintain financial clarity and avoid impulsive spending. The Profit First system is adaptable to businesses of all sizes, from solopreneurs to large companies. Michalowicz shares numerous case studies of businesses that have transformed their finances using this method. One example is a struggling service company that, after implementing Profit First, eliminated debt, increased profitability, and allowed the owner to take regular profit distributions. Another example is a high-revenue business with cash flow problems that stabilized financially after restructuring expenses using the Profit First framework. Michalowicz also addresses common objections to Profit First. Many business owners believe they cannot afford to take profit, but he argues that every business can start with at least 1%. The key is commitment and consistency. Even small profit allocations build financial discipline. He also challenges the myth that reinvesting everything is the best strategy, emphasizing that financial stability must come first for sustainable growth. The book concludes with a strong call to action. Michalowicz urges business owners to start immediately, even if only at a small scale. He emphasizes that Profit First is not just a financial system, but a mindset shift that leads to greater control, reduced stress, and long-term financial freedom. Ultimately, Profit First revolutionizes traditional financial management and provides a clear, actionable framework for ensuring profitability. Michalowicz's approach forces business owners to break bad habits, prioritize profit, and create financial stability. Whether a business is struggling or thriving, implementing Profit First leads to better financial health, sustainability, and success. In the concluding chapter of Profit First, Michalowicz shifts the focus to long-term business growth, emphasizing that true success comes from financial stability rather than reckless expansion. Many entrepreneurs mistakenly believe that growth automatically leads to profit, but Michalowicz argues that sustainable growth can only be achieved through disciplined financial management. One of the most important ideas in this chapter is the disproportionate expense growth problem. Many businesses scale too quickly, leading to expenses that grow faster than revenue, ultimately eating away potential profits. Michalowicz refers to this as the growth trap, warning entrepreneurs that scaling a business without financial control can be dangerous. He provides examples where businesses increase staff, expand office space, or launch new products before they are financially ready, resulting in cash flow crises and mounting debt. To avoid this pitfall, Michalowicz presents 4 key strategies for sustainable growth. 1. Grow using real profits, not borrowed money. Instead of taking on debt or reinvesting every dollar into expansion, businesses should fund growth through accumulated profit. This allows for organic, controlled scaling without creating financial strain. 2. Test expenses before committing to them. Instead of making large, long-term financial commitments, Michalowicz advises business owners to experiment with small-scale tests before scaling. For example, rather than hiring a full team, businesses can outsource tasks or automate processes to gauge necessity. 3. Measure the effectiveness of every investment. Before spending money, business owners should ask, will this investment generate measurable profit? If a new hire, equipment purchase, or marketing initiative lacks clear financial justification, it may not be a wise decision. Michalowicz stresses the importance of evaluating all expenses in terms of potential return on investment, ROI. 4. Step away from the growth at all costs mindset. Many entrepreneurs are influenced by the idea that a business should always expand, but Michalowicz argues that profitability is more important than size. Some businesses brag about revenue or employee numbers, yet struggle with cash flow and debt. A truly successful business is one that is financially stable, profitable, and able to sustain itself without constant financial stress. Another key takeaway from the final chapter is the importance of regular financial reviews. Michalowicz advises entrepreneurs to analyze their key financial numbers every quarter to identify areas where expenses can be reduced or optimized, determine how much profit can be increased without harming operations, assess which business activities generate the highest return on investment. Ultimately, Profit First is not just about fixing financial problems, but about building a long-term strategy for profitability. Traditional business models encourage entrepreneurs to focus on revenue first and worry about profit later. But Michalowicz proves that businesses should prioritize profitability from day one to create a solid foundation for sustainable success. Profit First is a powerful financial strategy that helps businesses break free from the cycle of cash flow struggles and transition to real profitability. The book teaches that profit should not be a leftover after expenses, but rather the first priority in business. Michalowicz demonstrates that even small changes in how money is allocated can dramatically improve a company's financial health, making it more resilient, profitable, and independent from debt or market fluctuations. By following this system, business owners can eliminate financial stress, stop living paycheck to paycheck, and finally experience financial stability. The Profit First method is applicable to businesses of all sizes, providing a clear, structured, and disciplined approach to managing money that guarantees long-term financial success and security.